Bitcoin is on a journey to one of the first major leg ups in this bull market, that 150K price point, Ethereum. Wow, take a look at that massive green candle this week. Just did a full send up 20% this week to over $3,500. As we've been discussing on the channel over the past month, other altcoins are following suit. XRP broke out of a sideways bearish trend last week and is now pumping green candles over $3.30. It's about to surpass the entire market cap of McDonald's soon, just about $9 billion shy right now. OG DeFi cryptocurrencies like Curve up 47%. OG memes like Floki up over 40%. New memes on the block like Bonk up over 45%. Here's what's insane. There's an altcoin rally kicking off altcoin season right now, and the Fed hasn't even started cutting interest rates. There's been a lot going on with US crypto bills passing we need to be aware of and pay attention to recently in order to understand what the future of this industry holds and make the best out of what will likely be the biggest bull cycle in Bitcoin and crypto history. So let's jump in. Hello, I'm Crypto Casey and welcome to another episode of Crypto This Week. Let's take a look at the latest global news stories affecting the markets as well as the macro environment at large. Please be sure to check out our sponsors, GoBabyTrade, Uphold, and Crypto Wallets, Tangent and Ledger. The AI revolution is here, and if we aren't using it, we are leaving a lot of easy money on the table. GoBabyTrade is an AI-driven robotic crypto trader that generates passive profits for us by taking advantage of market volatility. As long as prices go up and down, it literally prints money. It's a super simple set it forget it investment strategy. See it in action in this video and join our free weekly webinar every Wednesday to learn all about it. Secure your wealth with Uphold, the trusted money and crypto management platform that actually holds our crypto and cash 100% reserved. It's connected to over 30 underlying exchanges, so we get the best prices for crypto on the market with a lot more liquidity for trading, and we can trade anything to anything. Everything is a trading pair, and when we trade $100, we get $20 free and completely own, control, and protect your digital assets with cold storage hardware wallets. Tangent is perfect for beginners, affordable, sets up in just 90 seconds, and super easy to use. Anybody can use it. For advanced security, Ledger Stacks and Flex wallets offer cutting-edge protection at incredible discounts for us. So scroll down and use links below to redeem all the special offers they have for us. Alright, so a key metric we need to pay attention to right now is Bitcoin dominance. What is Bitcoin dominance? Bitcoin dominance simply refers to the percentage of money in Bitcoin versus the rest of the cryptocurrency market. So if we imagine a pie chart that represents all of the money in the entire cryptocurrency sector, and one section of the pie is Bitcoin, and the remaining section is all the other cryptocurrencies that exist, like Ethereum, XRP, Solana, Dogecoin, etc. And as more money flows into Bitcoin, Bitcoin dominance increases. And as money flows out of Bitcoin into other cryptocurrencies, Bitcoin dominance decreases. Simple enough, right? So what's important about the Bitcoin dominance metric is that at the beginning of crypto bull cycles, money starts flowing mainly into Bitcoin. So Bitcoin kicks off the bull cycle and Bitcoin dominance increases. And as the bull cycle progresses, more and more people become aware of Bitcoin. They also become aware of other cryptocurrencies like Ethereum. And as we've seen over the past week, once Ethereum's price starts to take off, the crypto cat is out of the bag. Everyone becomes aware of other larger cap cryptocurrencies, then mid cap cryptos, eventually full on degenerate small and micro cap altcoins. And as money floods into altcoins, Bitcoin dominance starts to drop. And behold, altcoin season. So checking out the Bitcoin dominance chart using the Moneyline indicator tool, Bitcoin dominance started plummeting and officially flipped in a bearish trend on the weekly. It's currently at around 61% at the time of this video, which means that of all the money, 100% of the money in the crypto sector, 61% of it is in Bitcoin and 39% of it is in all the other cryptocurrencies. So just for reference, taking a look at the Bitcoin dominance chart back in the last bull cycle, Bitcoin dropped from around 70% to this 60% level, and then dropped like a rock between March and May of 2021, all the way down to 40%, which was when altcoin season was in full swing. Literally anyone could throw money at pretty much any altcoin between that short window of time and make money. And unfortunately, most of the people that jumped into the crypto market at the end of the bull cycle got burned. If you were here watching the channel before the last altcoin season started, you were likely loading up during the bear market and were already in extremely good positions before the rally and hopefully sold before the end. See, the harsh reality of crypto is twofold. One, altcoins are just for trading. It's their highest and best use. And in trading, there is a loser for every winner. It is a zero-sum game. So basically, many of us who got in early, who did actually sell, were selling our massive profit bags to all the people that got in late. We've all been there. My first bull cycle, even though I got in early, I held on too long, didn't sell in time, and didn't do so well. My second bull cycle, I got in early and actually did sell and was able to reinvest a lot of profit into Bitcoin and diversify into other assets. So whether this is your first, second, third, or even fourth bull cycle, if you've been here since the beginning, the most important thing to do during crypto bull cycles is to get into positions early, and as the prices increase, ride the wave, take profit along the way, and try to get out before the end. We go over how we can easily do this, how anyone could do this in this video from a couple weeks ago, so check it out by clicking on the link above to greatly increase your chances of making some money in this bull cycle. Even though things have started pumping lately, we haven't seen anything yet. The best has yet to come. If we are here and aware of crypto, we are in extremely fortunate positions, and to take advantage of this once-in-a-lifetime opportunity, it's time to get off of the sidelines. All right, we've got some big news stories this week. Check it out. 3 crypto bills passed the procedural hurdles this week to finally get signed. We've got the Genius Act, the Clarity Act, and the Anti-CBDC Surveillance Act. Let's break them down together. GENIUS is an acronym that stands for Guiding and Establishing National Innovation for U.S. Stablecoins. And the GENIUS Act basically tries to prevent collapses like we've experienced in the past with events like Terra Luna, which wiped out like $45 billion in less than a week due to their algorithmic stablecoin collapsing. And the main reason this happened was due to lack of stablecoin regulation. There hasn't been a standard for transparency and audit of the underlying assets supposedly backing all of the stablecoins like USDC and USDT issued by Circle, Tether, and similar. So now with the GENIUS Act, for any entity that issues a stablecoin, the law mandates 100% full reserves, one-to-one backing of all stablecoins, full transparency and audits of the reserves, and mandates both federal and state oversight, in addition to current regulatory agencies like the SEC and CFTC. This is a big deal because it opens up the floodgates to not just a few major stablecoin options to use like we currently have with USDC and USDT. Hundreds of different stablecoin providers are going to start issuing and circulating their own private stablecoins, which will cause a massive explosion of financial innovation and competition. Amazon, Walmart, JP Morgan, Visa, MasterCard, pretty much most banks will all have their own stablecoins with unique perks, incentives, and features, which will benefit us, the consumer, greatly because we will have a lot of options to choose from. So we can choose the stablecoin that is most favorable for us. And also, unlike how financial institutions operate today, they will all be 100% backed, fully reserved, transparent, and audited, which significantly increases the safety and security of our assets. And what's interesting is we can actually ditch traditional banks and crypto exchanges that are currently not 100% backed, do not keep our money. In fact, they lend it out and earn profit from our hard-earned money. So we can get ahead of the curve and start using the wealth management platform of the future, Uphold. Uphold keeps our crypto and cash 100% backed, one-to-one. We can get 4.5% APY in a $2.5 million FDIC insured US dollar savings account. Most banks offer hardly any interest and only insure up to $250K. And unlike most crypto exchanges, Uphold is connected to over 30 underlying exchanges, allowing us to buy crypto at the best possible prices on the market, and it gives us a lot more liquidity when trading. And when we trade our first $100, we get $20 free. And another unique feature is that everything on Uphold is a trading pair. We can trade anything to anything else, which is super convenient and a game changer. We can sign up for free in just 60 seconds, so be sure to scroll down and use the link below to get your free Uphold account and start managing your money and crypto safely and securely with the new generation of banking. So the GENIUS Act will more likely turn out to be a great thing for crypto and even just everyday regular people, because it will broaden commercial access for not just banks, but also private issuers for stablecoins, which is in contrast to CBDCs or central bank digital currencies. And more competition and innovation in finance will make our lives a lot simpler and easier, and our money will be safer and more secure. And since all stablecoins will be fully backed, it will create a huge demand for US Treasury bonds, which is good for the US, and it will also help the US dollar maintain its status as the world's reserve currency. Cool. Next up, the Clarity Act. Basically, the Clarity Act determines which framework and regulatory body is responsible for Bitcoin, Ethereum, tokens, real-world assets, other types of digital assets. Basically, everything related to crypto. And it does this by clarifying the differences between each digital asset. For example, Bitcoin and Ethereum are classified as products that are intrinsically linked to blockchain systems whose value is derived from those systems, such as governance, transaction fees, or access to services, and therefore Bitcoin and Ethereum are digital commodities and shall be regulated by the CFTC, the Commodities Futures Trading Commission, which has significantly less regulations than the SEC. Bullish, very good for Bitcoin and Ethereum. However, this basically means that the SEC gets everything else. They are very powerful and they do not mess around. So any kind of investment contracts, securities, deposits, tokenization, NFTs, liquidity pools, real world assets, all regulated by the SEC. We shall see how that plays out as the industry continues to grow, innovate, and revolutionize the global financial system. Another thing that the Clarity Act does is actually allow us to own and control our digital assets, unlike how traditional stocks work. Check it out. Back several decades ago, people actually held paper certificates of stock they owned, where basically, if you wanted, you could be like, hey friend, do you want to buy a share of Ford Motor from me? And they could give you some cash for it. And when you give them that piece of paper, they completely own and control that share of the stock. The SEC still manages the actual security, the share of the stock. However, we can do whatever we wanted with it in terms of transacting and trading it. Nowadays, we don't control our stocks. It's all online, held and managed by broker-dealers, and completely surveilled by the SEC. So with the Clarity Act, basically any person, company, entity that wants to issue tokens, the initial tokenization process will have to go through the SEC. However, once the token is issued to us, we have the freedom to self-custody it with our own wallets and transact and trade with it however we want without being controlled by the SEC. This is huge and extremely bullish for crypto. So if you haven't yet, prepare now to completely own, control, and properly secure your digital assets with cold storage hardware wallets. Tangem, perfect for beginners. It's the most affordable and easy to use crypto wallet. It takes like 90 seconds to set up. Literally anyone can use it. And for advanced protection, Ledger Stacks and Flex wallets deliver top tier security at incredible discounts for us. So scroll down and use links below to take advantage of all the special offers they have for us. Amazing. Finally, we've got the Anti-CBDC Act, which pretty much bans the Federal Reserve from ever issuing a central bank digital currency. And we all get the right to self-custody our digital assets. Within these bills, we also have the right to know who is offering any new tokens, cryptocurrencies, NFTs, and any other digital asset, which is great because historically, when ICOs or initial coin offerings happened, the team would remain anonymous and then would rug pull the project and steal everyone's money. Now there has to be a full disclosure and transparency of anyone involved in digital asset offerings. This would likely put an end to most of these types of scams because basically we would know exactly the underlying owners and vested interests, who they are, any conflicts of interest that may exist, and transparently show us who these people are so that we could sue them if they stole our money to try to make a recovery, and they would probably face serious criminal charges. So basically, we now have some rug pull protection. All in all, these bills are designed to make all transactions that occur in the cryptocurrency sector fair and transparent investment products and services, which we have desperately needed in the space for a very long time. Very, very, very bullish stuff, especially on the cusp of what will likely be the biggest Bitcoin and crypto bull run in history. Awesome. If you would like to learn how we can use AI to make passive profits in crypto from the constant up and down price action with GoBabyTrade, check out this video. If you would like to learn how the next generation of banking with Uphold is a way better and safer option for storing our money and managing crypto than banks and exchanges, check out this video. And to sign up for a free Uphold account, click on the link on the screen. Like and subscribe for more. Be safe out there.